What was it like being back in Omaha after a 3-year break?
Oh, it's such a wonderful experience, this pilgrimage that so many have taken. I've been going to Omaha now since 2004.
Wow.
And so, there were a couple years where I was in London, so I wasn't there during those meetings, but I've been to the rest of the 18 or so that were available to me. So it's really nice to be back. I have a whole lot of friends there. You always pick up a nugget or two of wisdom. And so it was fantastic.
Yeah. Is the weekend generally pretty similar year to year that over the 15 odd years that you've been going? Because we've just attended our first one. So
yeah, it evolves. It evolves over time, actually. So,
right.
and it's getting better and better. Even the venue itself has gone through like 3 corporate name changes
Right.
since I started attending. But there are more and more events. We've started hosting this barbecue that you attended, and so there are more events. It's becoming more full, and the message that you receive from Charlie and Warren is changing. And now you get Greg Agable on the stage, you get a Jeet Jane on the stage. So certainly it's improving every year, and we just had the 3-year hiatus. So this was a big jump.
Yeah, it was pretty cool to be there. I was surprised actually about the number of sort of surrounding events. I thought it was kind of just going to be the one day at Berkshire, but there's so much going on.
Yeah, I really didn't know what to expect, I think, going into it, but it makes perfect sense that you have all these value investing and even different companies like Markel who run their Q&A there. It makes a lot of sense that everyone kind of congregates over this weekend. But yeah, it was fascinating to see. And yeah, we went to the barbecue. How long have you been doing the barbecue for?
We've been doing the barbecue for, I guess, probably 5 years now.
Yeah, right.
But 2 years it wasn't in person. So those years it didn't exist. It started just by accident where a couple of friends showed up for a barbecue and we weren't having a barbecue. And then we thought we should formalize it. So now we get the professional staff in there to help us. And the turnout's pretty great. We do it the Thursday before, so not everyone's there. But the VIPs are there. So people who are there for the barbecue are there with a purpose for the meeting. So you end up with a really nice crowd.
Yeah. I felt kind of, I wasn't quite sure what to expect, like who was going to be there and what kind of people, but there was like quite a wide variety of people. There was a lot of content creators there actually, which surprised me and was kind of a bit of a relief. I think like Brandon, I was like worried that it was just going to be all like fund managers and I'm just going to be here, this 23-year-old kid like, hi.
Yeah.
But no, it was great to just, network and chat with different people.
A lot of fund managers there as well. Vitaly Katznelson was there, who I think you're familiar with, and like Alex Rublikava, who now runs a VC fund, was there, and quite a few people. In fact, a lot of Guy Spears' staff was there.
Yeah.
Guy had a meeting that he had to attend, so he wasn't able to be there. But in the past, he's actually co-sponsored it, so we've done it together. It's a great event.
Yeah, it's cool. Jake Taylor dropped by from Valley
Jake,
After Hours.
yeah.
The Rebel Allocator.
Yeah, exactly.
Yeah.
In fact, there was quite an interesting comment from some of the ladies. I was speaking to some of the ladies, and then they were very distracted, and they pointed out that Jake Taylor had just walked in. I didn't, I know, yeah, he's a great guy, They said, no, he's, no offense, but they said, he's the Brad Pitt of podcasting.
Yeah, that's a compliment. I definitely haven't received that one. Although you've received some. You're the Joe Rogan of the investing podcast space.
Apparently,
Is that?
well, according to Guy, he just likes to build everyone up.
Yeah. Wow. Yeah. Okay. So yeah, over the weekend, I guess, man, like what were some of your key takeaways, I guess, from the meeting? A lot of similar topics or categories, I guess, were spoken about this year. A lot about inflation and. Was there anything in particular, I guess, you just drew away from the meeting this year?
Look, there are a few things. Because I've been in attendance for so long and I've been studying Berkshire for so long, a lot of the questions have been answered in the past. And so, but it's nice to have that consistency, to be reinforced. One of the interesting aspects, there's a couple of interesting aspects, but one of the interesting aspects that I took away was that they deliberately pointed out that if they could buy more of their shares, if they could buy back stock or go out and buy an external business, their preference is to buy an external business. So these, Charlie and Warren are still building their empire and they still want to expand. So, they know Berkshire so well. I wouldn't have been surprised if they had said, we'd love to just buy back our stock. It's our favorite company. We've built it. And if we get Berkshire cheap, it's better than anything else. But actually, they're still trying to expand and grow Berkshire, which is, I think, a really good sign. So they're buying back all the shares, but they'd still like to be allocating capital and growing. So that's pretty important.
Yeah, and it kind of caught me off guard a little bit. They've been like slowly building up this massive like 150 billion in cash, and they've all of a sudden spent like 40 of it, right? What do you think of that?
And then they're going to always keep 20 and probably a little more than 20. So they spent.
They're getting down.
They're down to 100 maybe.
He's down to his last 100.
Yeah,
billion.
last 100 billion. Yeah.
And there's headlines about everything else that he's buying, and so it's interesting. He also talked a little bit about Activision, which was an amazing little purchase, but he pointed out this is the same workouts he used to do in the 60s, where he's just doing like a corporate structure sort of ARB, and he expects Microsoft to be able to make the purchase because they have cash on the balance sheet. So he's just going to collect some bit of a gain here until the deal closes. So it's
quite significant on that particular deal. I think it's like a 20% upside between the stock price now and 95. Do you do any of that through your fund? Have you dealt with those kind of situations before, or is that just something you don't do?
We will do small opportunistic things, certainly. But it's really not the core of the business. The core of the business is our long-term value portfolio. So we're buying these great businesses run by great managers, buying them for great prices, and then really just trying to hold on to these for the long term. In fact, like an infinite time horizon, ideally. So we do a little bit of that, but not that frequently.
Yeah, cool. It is cool to see Buffett going back to like his what he was doing in the 50s and 60s. It's kind of crazy. Like you read some of his very old letters, and he's talking about how he's starting to get some advantage out of getting bigger when he's managing like a couple $1 million or whatever. And then the story obviously flipped the other direction, that we've got too much money and not enough ideas. So it's interesting that like those opportunities would exist at that scale. You'd think that those would have been arbed away.
It's quite incredible, but I think fear and greed, just the herd mentality, just pushes even billion and almost $1 trillion businesses to extremes. So they've been able to find these opportunities, but certainly it's much easier if you're dealing with small cap companies that are less scrutinized than something like even an Activision or some large cap. It's just they just tend to be much more frequently mispriced.
Yeah, you can't really, I don't really think that many people do this anyway, but you can't really look at Buffett's cash position and say, oh, he's sitting on so much cash, he must think there's some kind of event coming. You can't really do that because, of course, the scale that he's operating at is just so different to even the average person, or even a moderate fund. Just the different opportunities that are available. I think I've run like some approximate maths a few times. Like $150 billion is, if he was going to pile that into a couple of companies, there's literally just a handful of businesses that are actually available to him where he won't be buying more than 10% of the stock, for example. So it's
couldn't agree more. In fact, from his perspective, he'll move markets, and if he buys more than 10% and has to file, everyone's going to know, and the price is going to change. His cash position, he's playing an entirely different game. If you look at even Daily Journal, where Munger is running the portfolio, they're just fully invested. And Munger even pointed something out at the Daily Journal meeting where he said he's never in his life, he's 98 years old, he's never in his life sat around with cash waiting for an opportunity. So even if you're dealing with many millions and even tens of millions, I think even beyond hundreds of millions, you should be putting all your cash to work, because there's plenty of opportunities to put 10 million into a certain undervalued security.
Yeah, I was going to ask you about that. So I presume, based on that statement, that you try and be fully invested in your fund most of the time.
Yeah.
How does that work with, I'm curious how that works with the flow of funds coming in and out from investors. If money's coming in and say you have a number of positions, but none of them are at the dirt cheap prices that you might have been buying them previously, how do you kind of navigate that? Do you just spread across evenly? Are you buying? Are you selling puts? What kind of approach are you doing with the money that's kind of flowing in that's out of your control in a way?
Absolutely, great question. So first of all, we do keep a cash position because we have the strategy where we sell puts. And so those, a lot of times that's allocated to the puts that we've already
it's
sold.
essentially collateral though.
It's collateral.
Not, yeah.
That's right. It's collateral. But we have a modest sized fund, right? There's 20 million-ish. So if we say have a new LP that joins and puts in $3 million, we can be really patient with that capital. So there's nothing that's putting pressure on us to buy. But we have these compounders that I know extremely well. And, one or two of them might be inexpensive and it will allow us to allocate additional capital. So we can allocate capital to the positions we already own, or we might be watching some new positions and allocating there. But it's very, very easy to allocate 3 or 5 million to a good position, especially when you're selling a put, which gets kind of magnified, 100x, because every contract represents 100 shares.
Yeah.
So it's quite easy. It doesn't take long to allocate capital, but we can be very patient. So even a 3 million, suddenly we have 15% cash or something. That's not an anchor for us. And within a few months, or even if it takes a few quarters, that will get allocated to a good investment opportunity.
Yeah, I think you mentioned in one of your videos that at your size, there's more opportunity. You have more ideas than capital to put to work.
Far more ideas than capital. It's because in the smaller space and even the larger space, but if you're looking globally, there's an opportunity somewhere. There's a dynamic or an event that's occurred and put a great company in the gutter somewhere. And so you just need to be sort of watching everything, and you can deploy the capital. Buffett has an entirely different problem. So it's and he has to be very careful with the signals that he's sending to the world.
Hi, it's great to see you here. If you enjoyed that video, you're going to love what we put together for you here. See you there.